Welcome to Business Apac. Today, we're diving into a critical topic, India versus Canada, a trade war next. Let's break it down. The diplomatic crisis. Recent diplomatic tensions have led to harsh public statements, the expulsion of diplomats, and no signs of resolution. Both countries are holding firm on their positions, and now businesses are left wondering, will trade be caught in the fight? Canadian officials like Mary Nam, the Minister of International Trade, are trying to reassure businesses. Despite the uncertainty, she recently stated that the government will continue supporting economic ties. But let's be honest, if the diplomatic situation worsens, trade could be affected, and that would have serious consequences for both countries. India-Canada bilateral trade, how big is it? First, let's understand the size of the India-Canada trade relationship. It's worth about $8 billion annually. While that may seem large, it's less than 1% of India's total global trade. So the big picture is that this isn't India's most significant trading partnership, but there are still key sectors that could be disrupted. As for foreign investments, Canada has invested $3.6 billion in India over the last 20 years. That's only about 0.5% of India's total foreign direct investment. While these numbers aren't massive, over 600 Canadian companies operate in India, making the market essential for those businesses. Trade impact, items at risk. So what's on the line if tensions escalate? 1. Pulses. India is heavily reliant on Canada for its lentil imports. About 25% of India's pulses are imported from Canada, amounting to $930 million this year alone. If trade stalls, this could hurt both Indian consumers and Canadian farmers, who produce 1.5 million tons of lentils, with India buying a major share. 2. Potash. This crucial fertilizer is another big-ticket item. India imports 1.5 million tons from Canada, making up 37% of its potash imports. The two countries have a 3-year agreement that, so far, hasn't been affected by the diplomatic spat. But if the crisis escalates, the future of this agreement could be in question. 3. Pharmaceutical products. India exports a significant amount of pharmaceutical products to Canada, including generic medicines and APIs. The Indian pharmaceutical industry is a global leader, and disruptions could impact Canada's access to affordable drugs, especially for chronic conditions. Canada relies on India for sourcing key APIs used in its generic drug production. In 2022, India's pharma exports to Canada were valued at $381 million, making this a critical trade sector that could face shortages and higher costs if tensions escalate. India's exports to Canada, what's at stake? Now, let's flip the script. What does India export to Canada? Here are the top 5. Pharmaceutical products, organic chemicals, iron and steel, gems and jewelry, electricals. If trade tensions escalate, these industries could face disruptions in reaching Canadian markets. Could this lead to a trade war? It's possible. If diplomatic relations continue to deteriorate, retaliatory tariffs or stricter trade policies could follow. Canada may have more to lose since it relies on India as a crucial market for its lentils and potash. Indian companies, however, have a larger and more diversified global trading network. That said, no one wins in a trade war. What's next? Right now, Canada is maintaining that trade won't be affected and that it will be business as usual. But if this situation isn't resolved soon, both countries could find themselves caught in a tit-for-tat trade dispute. For Canadian companies doing business with India, uncertainty is the biggest challenge. Conclusion. We hope this has given you a clear picture of the current trade tensions between India and Canada. While trade is still ongoing, the road ahead is uncertain. What do you think? Will this diplomatic crisis lead to a trade war? Let us know in the comments. And don't forget to subscribe our channel for more updates on global business trends.